Have you been wondering like how much you actually need to put into an infinite banking policy and what's too little, what's too much, what's the boundary there? That's exactly what I'm going to address here. And by the way, I'm going to show you an example of somebody who not only was told that they should do more, but also how we could actually get them another $350,000 over the next several years. So here we go. All right. To answer your question, like how much minimum should you put into a whole life policy, an infinite banking policy? I believe it should be at least 5 or 10,000 a year. Too many people tell us that you got to put in more. It's got to be a large sum like 25, 30, 50,000, 100,000 a year. The only reason they're telling you that is because they want to make more money. Now, granted, could you make a little bit higher ROI by fractions of percent? Yes, you can. You definitely can make a little bit higher ROI with a higher amount, no doubt. But can it still work if you do less? And the answer is yes. Not this example I'm showing you here, but I just showed an example to a guy yesterday, 38 years old, but he's in great health, 5,000 a year maximum. His minimum was less than 1,000 a year, but 5,000 a year maximum, and it still worked, right? It was still good. In fact, really until he hit 24,000 a year, it didn't actually get cheaper to where he made a little bit higher ROI. So that's my point here is that you want to make sure it's designed correctly, and it's got to be with the right people. The insurance agents, they don't always tell the truth. So let me just dive right into this and share with you what I have right here. Now I'm going to show you first this example that this guy was sent. Now this guy has a brother that's in real estate investing, and does a great job. They went with an infinite banker that's kind of popular in the real estate space, in the infinite banking space, used his team. And the team came back, and I'll tell you, this guy that's now become our client became very excited. He thought, "This is great. Look, I put in 10,000 a year, and look, in year one, I've got 6,900, almost $7,000 in cash value." So he's thrilled. I remember him telling me this in person because he came to one of my live events, and I said, "Wait, how old are you?" 33. "You good health?" "Yeah." "You can do better." And it's like, "We can definitely do better." I said, "This is good, but it's not the best." And I kind of downplayed it. And he even admitted that too. He came back, he said, "Chris, you downplayed this a lot, quite a bit." Because why? Because in my example here, it was a little bit different. Instead of 6,900, year one, $8,000, putting in the same 10,000. So over $1,000 cheaper. He saved that much money. Why? Because I wasn't trying to make a bigger commission off of it. That's why. We actually go all the time, want to make sure you get the best bang for your buck, that you always get it, regardless of how much you're putting in. That's the thing that drives me nuts, is that if you put in less, there will be agents out there that will manipulate the numbers, make it a little bit better in their favor, just so that just so that at least they'll get paid something. The truth is, we still get paid pretty decently from this guy's policy. It's not that bad. And we didn't have to do a lot of work or spend a lot of time on it. It's not hard. And so we ran this apples to apples, right? And again, 8,000 that first year. Even at year 5, look, he's put in 50,000. He has almost exactly $50,000. So he's almost broken even though it's a lower amount than what people might recommend. But remember, in this case, when he was at year 5, he had about 37,000, or sorry, he had 43,960. So about 44,000. So he had about really $6,000 less in year 5. And really, he doesn't break even until he hits 90,000 at year 9, right? He finally surpassed that break even point. So where ours does it about year 5 and definitely easy clears it by year 6, his really takes till year 9 or 10 to do the same thing. It takes really 4 extra years to do the same thing that ours is doing. Here's the other thing too. Look at this. His minimum premium that he's required to make is $2,800 a year. That's not bad, by the way. That's still not a bad thing. This is what I refer to as a good infinite banking policy. But again, not best. What's the minimum that he has to pay on the same one with us? $1,700 a year, right? So it's actually about $1,100 cheaper per year, which is why he has over $1,000 more in cash in the first year, right? And that's why it keeps building. Heck, even by year 10, right? Notice this, 119,000 in year 10, where the other guy, right, has 103,000. So we already have $16,000 more after just 10 years. And watch this, despite them putting in 2,800, and they have it going forever, right? Because they had show 2,800 going in the rest of the life till age 121. Look at this, even look just out 50 years. So if we go out to the 50th year, that's age 83 for him. So 50th year in this other company, he has just over $700,000. Death benefits just under 900,000. So 700,000 of cash value. Ours at year 50. Oh, by the way, we stopped paying into it after age 66. So already, by the way, we've probably paid into this less than about $50,000 less in our example than his. So they paid $50,000 more to get that 700,000. 50 years, what do we have? Over a million. We have over $350,000 more, $360,000 more than the other example, and we still had him pay over $50,000 less. And actually, I'm probably being very conservative on that because really for 23 years, he's paying $1,100 a year less. And then he paid $2,800 a year less from that time on, which was like another 17 years. So in actuality, it's probably more like $60,000 that he paid less than what we did. You pay $60,000 less with us and have $360,000 more, and he still has a bigger death benefit. So, I mean, this is how we just get. So it might seem like a small difference, right? This might seem small, but hey, $1,000 a year, but that's 10% more, and that adds up over time to the tune of that. This guy only put in 140,000. That in 50 years has over $1 million in it, over $1 million versus 700,000, right? Again, neither are bad, but one's good while one's the best, and that's the thing that we try to really hit as a big point with our kind of policies, that we give you no BS, right? Like we're going to give you the best policy every time, regardless of the commission and all that kind of stuff, right? Because we know that times will change. You guys, once you're a client for life, and you're going to come back to do it more and more in the future. Things aren't always the same. I've had plenty of clients who could do very small policies in the beginning. All of a sudden, their life turns around, things get better, and they end up becoming some of our most loyal, consistent, best clients. And that's what's so important when you're playing this long game, especially when you've been in the business like I have for over 2 decades. You know that the best thing to do is do the best every single time. And that is our promise to you, is that you will always get the best every single time. And if you're not sure, hey, send us some examples. If you're running numbers with other companies, which we welcome, we don't mind you doing competition because it only convinces you more that we're still the best. That's the thing. And in fact, it will force the other guys to try to do as good as they can, and they'll still realize it probably won't be worth it for them. So I've had several people go out, those other guys, they just say, you're not going to do better than that. Go with Chris, go with Money Ripples, do what they do. And that's true. So anyways, that's not just talk, that's reality. And the thing that makes me so happy is that, just like in this guy's case, even if he's doing 10,000 a year, which is no small change still, but still doing 10,000 a year can lead to hundreds of thousands of dollars more after several decades. Guys, that's important. That's the way it should be each and every time for you. If you have questions, reach out to us at moneyripples.com. Contact us today.